So FTA and DTO. FTA, I said, is fast troubled area, and DTO meaning double takeout. So let's start with FTA. So FTA is, we use FTA to verify structures in the market. Meaning when we find a structure, a structure break like this, we have to verify this structure if it is where we are supposed to trade this structure. So how do we verify this structure is what we are going to use now, FTA method, to verify this structure. So as if the price breaks here, we can now consider this area to take our trades. So we cannot take trades inside here until we verify the structures inside here. And how to verify it? To verify the structure, you have to know if the structure really breaks this high here or this low here. So how do we know if the market has really break this high or this low here? Is what we are going to use now, FTA. Now, we know that we use wick to body breakout. This is our main principle. We use wick to body breakout. So if we find a structure break like this, we find the body that has break this high. Now, sometimes you can find maybe a structure of 4 hours has breaked, and still the price did not respect this low and break below. And you start wondering, why does the price did not respect this high and break below? There are reasons here. The one reason that is behind here is this high here was not breaked by body. You can see a body break in the 4 hour, but if you go to the daily, you see just wicks has break here. So if you find this action, so this means now, whenever we find a structure, we have to verify if this structure is really breaked by body. From there now we can be assured to trade this structure. So how do we use now FTA? In the last lesson, we learned about time frame coordination, where we have a constant time frame, a monthly constant time frame, a series of monthly, and we have a series of what? Of weekly. So monthly is coordinated with daily. Daily is coordinated with 1 hour. And 1 hour is coordinated with 15 minutes. Is it? So that is the series of monthly.
Yes, sir.
In the series of weekly, we say weekly is coordinated with 4 hours. 4 hours is coordinated with 30 minutes. And 30 minutes is coordinated with
5
what?
minutes.
5 minutes, yes. Now,
5 minutes.
Now, so we have now to find, I mean, we have to find FTAs, and we say now FTA is the confirmation of the structure. If the structure really breaks the high or the low. So now, how do we verify? So in these structures, I mean, in this time frame series, we have time frames that are not inside the series, one of these series. Those are the time frames we use to verify the structure or to find FTA. I need you to understand this.
Okay, sir. Yes,
So, for example, now in this in this series of monthly, we have time frames inside this series that are not visible in this series of monthly. For example, from monthly to daily, what time frame do we miss inside here?
Weekly.
Weekly. So weekly is the time frame that is not appearing in this series. So in daily to 1 hour, we have what?
4 hours.
4 hours.
4 hours.
From 1 hour to 15 minutes, we have 30 minutes.
30.
And so on.
Yes,
to the weekly series. We have from weekly to 4 hours, we have what here? Between
daily.
Daily. From daily to 30 minutes, we have
1 hour.
1 hour. From 30 minutes to 5 minutes, we have what in between?
15 minutes.
15 minutes.
15 minutes.
So now here is the deal now. So these time frames that are not appearing to the series you're using, those are the time frame we are going to use to confirm FTA. So for example, you have a structure. This is the 4-hour structure. So you find a break in this 4-hour structure like this. So to confirm that the price has really break this high, you have to go to the higher time frame that is not appearing to this to the series you are using to confirm the break here. So for example, this is 4 hours. That means you are going to verify this structure in the daily time frame. So this is 4 hours. The FTA of 4 hours is what? Daily.
Daily. Yeah.
The FTA of 30 minutes is what? 1 hour. So you are going, you verify structure going to the higher time frame. Okay. So the 5-minute structure, you will verify the 5-minute structure in the what? In the 15 minutes. Likewise, in the monthly series, when you find a daily structure, you are going to you're going to verify this daily structure in the weekly time frame. If you find a 1-hour structure, you are going to verify a 1 hour structure in the 4-hour time frame. Okay. A 15 minutes, you are going to verify in the what? 30 minutes.
30 minutes, yes.
And if you find the weekly time frame like this, you are going to verify in what? In the monthly.
Monthly. Yes.
So this is what we use all the time. So you can find some traders never get losses because they use this technique to verify structures that they marked. Those structures can have, some people call it fake breakouts. Some people call it what? Liquidity swap. So it's the same thing. FTA. So if you find a structure like this has blacked maybe in the 1 hour, but in the FTA of 1 hour, which is 4 hour, did not break by body. It's just break by wicks. That means there is high probability of market to fetch liquidity below this high in order to come and break the high. So if you find you mark the 1 hour shift like this, and then you find the market break the low, and you start asking yourself, why did the market did this? And I was just right, and maybe you find the formation there clearly, you mark the entry, and then you were stopped. If you go on and check this high, you will find out in the FTA time frame, you'll find out this high has never blacked by body. So that is what we use all the time when we do our analysis.
Okay, sir.
Okay, so in the issue of DTO, this is not it's just I'm just giving you some hints. It's not very necessary, but just hints. It's a technique. So if you find a structure like this, or maybe like let me draw this. For example, this is high, then the market created some series, then the price breaked this major high. So if you find a structure like this, what do we mean first by DTO? DTO means double takeout. Double takeout meaning the price has to break the highs or the lows twice before the major break. For example, in this structure here, these are the highs created by the market before the major breakout. So the price has performed breakout of this high for the first time, the second, the third, and the fourth, where the market breaks. So this is what we call double takeout, meaning the price has to break these highs more than once. So if you find the price, if you find price has breaked more than once before the major breakout, the only place you have to consider finding entries is the first breakout. The first breakout created is where you have to consider to find entry. Maybe the formation, maybe the candlestick anatomy, maybe the camouflage, maybe the liquidity engineering. Inside there is where you have to find entries. It can be like this, maybe low, then the price created some series here, then the market breaked. So if you find a breakout like this, meaning you have to ask yourself, maybe the price has breaked the recent highs more than once. If it break the first time, the second, and the third, that means the price has performed double takeout. So you have to find entry in the first takeout. There is where you have to consider finding entries. So this is just the hint I gave you. But today's lesson is mainly focused in the FTA. It's very, very important. Okay, so let's dive in some few examples. So you can understand more about this FTA issue. So, for example, look here. This is very, very important. I got an entry somewhere here. Let me check. Let me cut here, like this. So look here closely. This was our high here. So if you zoom out, this high was blacked. This is 4-hour time frame. This high was blacked by body in the 4-hour time frame. So that means I have now to find entries inside this liquidity area. So inside here, I have to consider finding my entries because the price broke this high. Now, we have to confirm this structure if it is really blacked. So we are in the 4-hour. Where are we supposed to verify this structure? In the daily. In the daily time frame is where we're going to verify. Now look in the daily. In the daily, we see only a week has blacked here. So that gives you information that price now will seek more liquidities below this point. So you have, if you see this action, you have to position now yourself for sales rather than the buy entries. So look close here. If the FTA has failed to break, so we go back now to our coordination time frame, 4-hour, and then we have to find change of character with inside formation to get us from here toward this low, to break this low, because now we know this price will never respect this area because the price has failed to break the FTA. So we have to position ourselves for sell entries in order to come and break this low. Now we are in the 4-hour. What is the coordination time frame? We go to the 30 minutes to find change of character with inside formation. Have you understand? Meaning we have to find something like this. A change of character. No. Something like this. A change of character with inside formation. A change of character with inside formation. That is where we are supposed to enter for sales. Have you get the point there?
Yes, sir.
So now we are in the 4-hour. The coordinated time frame is 30 minutes. So in the 30 minutes, we have a change of character with what?
Yeah.
With inside
Formation.
formation.
Formation. Yes.
You see there? So there now is where we're supposed to what? To put our entries. So
Yes,
look, the price. Oh, what happened now? Okay, so if you play price here, you find out the price came to that area and sell. You see, the price went to break the low here. So some people may find some entries inside this area of 4 hour, they were stopped, and they don't know why they stopped. It's because they didn't verify that high if it was blacked. Okay, so let's find another.
Okay.
Let's find another example. Let's find another example. So look here, even here, there was an example, a clear example here. So let's look this part here. So let's look this part here. So look this structure. This is a 4-hour structure right here. The 4-hour structure has what? Has breaked by body. But if we verify this structure in the FTA time frame, which is daily, we found out it was just a week that has breaked. You see?
Yes, sir.
So if we find this,
Yes, sir.
if we find this action, we know now price will not respect this law. Will never respect this law. Price will trade below this law. So what we do now, we go to the coordinated time frame, which is from 4 hours, we go to 30 minutes to find change of character with what? With inside formation.
Okay.
Let me check here. Yeah. Yes. So price. So let me ask you now. Let me ask you this simple question.
Yes, sir.
Let me put these lines in blue.
Yeah.
So where do we mark our change of character? Do we mark here or we mark here? Where do we mark our change of character?
Here.
Yes. Why? Because this high was never blacked. If the price break this high, then we could consider this as our change of character. But price did not break here. It just striped by wicks. So this was our list, our high, last high, and this is the low. So here is where we're supposed to mark our change of character. Now we mark change of character with the inside formation. So price created different inside formation. This was our inside formation, and these are the FIF of this formation. So we mark the formation. Which formation were we going to mark? The what is happening?
No,
so we're going to mark this formation here. Yes.
Yeah.
Correct. So inside here is where we are going to mark our entries and our stop losses. So look what the market did. The market came toward that point, sniped, and voila, the market sell. A very, very simple technique. Very, very simple technique, and is very, very important to understand. Any structure you mark in the market, you have to verify it before you put your decisions. Any structure. So I myself, so for example, you may ask yourself, for example, if you are in the daily time frame, sometimes, let me give you this. Sometimes if you find the daily time frame like this has breaked, so the FTA of daily is what? Is weekly. So sometimes we don't consider daily FTA, I mean weekly FTA. We do not consider, because if a structure has break in the daily. Daily is the a very powerful time frame. It's a very powerful time frame. So I advise you, if you want to do intradays, it's better you use 4 hour and confirm this structure in the daily. This will be very helpful for you. But if you use daily as intraday, you just take short trades and turn and you close them in those turning points. But if you use
Okay, sir.
4 hour, you have to go to consider the FTA of for daily. So this is the very simple technique. So let's find
Okay, sir.
another pair. Let's go to gold. Let's go to gold
Okay.
and see what's happening. So we are in the 4 hour. Let's find the structure of 4 hour. Even here, look here. So this was our 4 hour structure. This one here. This is our 4 hour structure. So the price has break. Now look, if you can even see yourself here what the price did here. So let's cut the price here. So this is the 4 hour structure, meaning the price has breaked. So we have to consider this as our area of liquidity. Now, if we go to confirm this structure in the daily time frame, we see price did not break by body. It just break by what? By wick.
Yes, sir.
So if we go back now to our time frame, what do we want to see? We want to see a change of character, and what? A change of character with inside formation. So the coordinated time frame of 4 hours is what? 30 minutes. No, daily is the FTA. But the coordinated time frame of 4 hours is 30 minutes.
30 minutes.
So we go to 30 minutes to find what? A change of character with inside formation. So price created a change of character with what? With the inside formation.
Inside formation.
See? So let's see if the price came back. Price did not came back. See?
Yes.
Price came back. Took so long. I don't know why. Let me go back to 4 hour and see. I think price did not come back. So this is the entry of this week. So we are waiting this. We are waiting for this entry here to come and take, because that's the reason. So the price is still coming. We are waiting for it. Okay, so that's the entry of this week. Let me just screenshot this. Okay, so let's find another example. Let's find another example here quickly, if we can find one. Let's go to GBP USD. Let me see GBP USD. I think I had one entry using FTA. I don't know what was where. Where was it? Let's see this structure here. If we confirm to daily. Now look here. Look here. This is the structure for our, this was our high. Then the price break is by body. But if you go to the daily time frame, you will see why price traded below this point. The price did not break by body.
Okay.
That's why price came below this point to seek for more liquidities. So if we go, this is
Okay,
for
sir.
our, let's see the 30 minutes. If we had entry, so it was not so clear. This was a change of character, and we had different formations. We had this formation, we had this outside formation. I mean, so I don't know why the price did not come here. So if price did not come here, meaning we still have to consider this point. So it can be our entry there. So let's wait for the price to come there. Let's find another example. If the network is not so great. Let's find another example. Let's see here. Let us see this point here. The price break this high.
Okay.
But if we go to the coordinated time frame, we see price did not break by body, just break by wick. So if we go back to 4 hour now, to our time frame, we have to find change of character with inside formation. So we go to the coordinated time frame, which is 30 minutes, and we see the price changed character.
Okay.
The price changed character here, and it left us with what? A formation. Now this formation is hidden in this camouflage. It is hidden in there.
Okay.
If you go now to the lower time frame,
Yes,
you
sir.
can see the price created, and this is a long wick rejection. So we have long wick rejection. We will learn this in the liquidity consumption. So look now, the
Okay,
price came back inside there, inside that long wick, and the price
yes, sir.
sold toward this low, break the low there.
Okay.
See. So
Yes.
this is the simple technique we have to consider. So if you practice this technique a lot, you'll find out every day you can get entries because of this simple technique.
No, okay.
But if you find a structure and you verified it to the daily and you see the daily has blacked by body, there now you have to consider the structure inside that structure to find entries.
Okay.
Very, very simple.
Okay.
Okay, so that is it in the part of FTA. I will send you this video to do your reviews. I hope you are doing practice.
Okay. Yes, sir, I'm practicing.
Yeah, that's good. Okay, so that's it. We will meet again in Wednesday, and we are going to discuss about what? I don't know.
DTO.
Okay, so that is, man. Okay, so I wish you very, very good
Yes, sir.
night. And
Yes, sir. My voice is audible, sir.
what? Sorry?
Yes. My my voice is audible.
I can't hear you.
Hello, sir. Can you able to hear me, sir? My voice is audible.
I don't know what's happened to the mic. I don't hear you anymore.
Sir, can you able to hear me? Hello, sir.
Hello?
Yes, sir. I can you able to hear me?
Yeah, I can hear you now.
Yes, sir. Yeah, I'm practicing, sir. So
Okay, very good, very good. That's good. Okay,
yes,
now,
sir. Next class will
so
be
next class?
a DTO, right, sir?
Yeah.
Okay. Okay, sir.